This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, December 15th, 2015. Euro dollar. So this latest break above last week's 1043 high is a bullish development for the euro and could open the door for an additional correction in this market towards a measured move objective up towards the 1290 area in the sessions ahead. At this point, even if we do see a rally up towards 1290, the overall structure continues to be quite bearish, with the market confined to a broader downtrend. But again, the market is now in the throes of a correction, looking for the next medium-term lower top ahead of a bearish resumption. Inability to establish back above 1043, however, followed by a break below 107.96, that recent low that we had seen, would open the door for a more immediate acceleration to the downside and bearish resumption back down towards and below the recent lows that we saw at 105.20, exposing the March multi-year base at 104.60 further down. Sterling dollar. So cable has been trading within a very well-defined downtrend, making a series of lower tops and lower lows off the 2015 high at 159.30, and a fresh lower top is now sought out below 153.36 ahead of the next downside extension below recent lows that were seen at 148.95 and towards the 2015 low at 145.66 further down. At this point, only back above 153.36 would compromise this bearish outlook. Dollar yen. So dollar yen continues to extend declines following the break of a multi-day range and breaking down below that multi-day range support at 122.20. The breakdown now exposes deeper setbacks in the sessions ahead, potentially down towards the 119 area, with a break below there to expose the August base at 116.12. At this point, any rally should be very well capped by that previous support now turned resistance in the 122.20 area, while only back above the recent range high at 123.76 would compromise the bearish outlook. Euro Swiss. So Euro Swiss continues to be confined to a broad multi-week, multi-month consolidation above 107, and the market is classified as trading within a bullish recovery off those record lows from earlier this year. The consolidation should therefore be broken to the top side eventually beyond the September peak at 110.50, exposing a move towards the 115 area further up. At this point, only a close back below 107 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie has been confined to a broader downtrend, and although we haven't seen much in the way of any direction over the past few months, the market is classified as trading within a bearish consolidation ahead of what should be the next downside extension below the recent multi-year low from August, just ahead of 69. At this point, only back above the 73.85 recent high would compromise the integrity of the current downtrend. Dollar CAD. So dollar CAD has surged to fresh multi-year highs, fresh 11-year highs, trading all the way up above 137 and towards 138 ahead of the latest minor pullback. While we could see a bit of a correction over the coming sessions to allow for overbought technical studies to unwind, the market should find eventually a higher low by previous resistance now turned support in the 134.57 area in favor of the next upside extension and bullish continuation. Ultimately, only back below the 134 area would compromise the immediate bullish outlook for dollar CAD. Kiwi dollar. So Kiwi is confined to a broader downtrend, with this market trading below or being well capped below the 69 area. At this point, only a break back above 69 would compromise the current downtrend and put the pressure back on the top side. Any rally should continue therefore to be very well capped towards 69, with a lower top eventually sought out and favored back down towards for a lower top favoring the next downside extension back towards and below recent lows that were seen in the 64.30 area and towards those August base, that multi-year base that's in the 62 area further down. SPX 500. So the S&P 500 is finally showing signs of the formation of a major top following the latest break below key support at 2003. The break has taken the market down to as low as 1993 in Monday trade, and the market now will need to establish a close below 2003 or a close below 2000 to really confirm and accelerate declines back down towards the low that was seen back in September at 1870. At this point, look for rallies to be well capped, while only a break back above 2117 would compromise the bearish outlook for the SPX 500. Gold. So gold has been consolidating off recent multi-year lows at 1046, but the market is showing signs of the formation of a potential base. A break back above 1100 would, however, be required to open the door for an acceleration to the top side and alleviate immediate downside pressure. However, inability to take out 1100 followed by a break back below 1046 would expose major psychological barriers further down at 1000.